Joining me now to preview today's FOMC rate decision and the rate cut path from here. We want to welcome in our next guest. That is Daneille DiMartino Booth, CEO and Chief Strategist for QI Research. Danielle, it's good to see you as we head towards the close of the Fed's last policy meeting for the year. So consensus expectations are that we'll see a 25 basis point cut from here. I'm sure you line up with that view, but my question, I guess, is what's your expectation beyond that?
Well, I think right now what the market is anticipating is that we're really going to see a shallower path going into the first half of 2026, really the first 5 months of the year. That would be the end of Powell's term as chair. And I think that they see most Fed officials as being more hawkish than even the data would suggest that they should be, again, until there's a change of leadership, presumably in the second half of the year.
And then, Danielle, one of the things that seems to be apparent from the last meeting and even the lineup of speakers that we heard before the Fed's quiet period was that there is dissent in the room, which is unusual, the amount of dissent. What are you expecting on that front?
I would not be surprised to see another double dissent, if not even perhaps a triple dissent. And again, I think the key here is on both sides of the decision. In other words, we could see once again somebody who's saying we should not have cut rates at all. And somebody, again, beyond Stephen Myron, I would not be surprised to see even two dovish dissents, people who felt that we should have pressed forward. I used to be at the Fed, I still say we sometimes, but that the Fed should have pressed forward with a 50 basis point cut today. There are so many cross currents in the data right now, but we do know from week to week and everything we're hearing, and from Americans, by the way, that the job market is simply not what it needs to be.
And that's the thing, because one of the things, obviously, that the Fed has to be reliant on is more of the private sector data, because we do continue to get ADP, but we're still behind on economic data because of the government shutdown. So it feels like it does complicate the Fed's path and the push for consensus. What we have seen is the data that we do have. It does seem to be that there's weakness in the job market. It seems like the Fed is leaning towards that. How much does inflation matter?
That's a very good question, because the inflation that does matter to so many Americans, whether you're talking about their utility bills that have gone through the roof because they've got a data center in their backyard, or food costs, these are the types of inflation over which the Fed has absolutely no control. And when it comes to things like spending on services, you're hearing American families saying, we're not taking the vacation. We're not splurging on this or that. Discretionary spending has taken a serious hit. That's the kind of inflation that the Fed can control for. So you revert back to what we started talking about. If they can't control for the type of inflation that's rising, and that's why they look at core inflation, if they can't control for that, why aren't they leaning harder on their employment mandate, unless the Fed is trying to be more political?
Danielle, let me go back to the other point you were making about, the first half of 2026 may look different than the second half of 2026. And given what markets are expecting, how should everyday investors think about a potentially sudden policy pivot halfway through next year?
What I think is most interesting is that markets are forward-looking mechanisms, and presumably they would have already seen through to a more dovish pivot, and they would be pricing in anticipation of that. And yet that's not what we're seeing. So I think we're in a very highly unusual market dynamic right now, where investors have a difficult time ascribing why the market is behaving the way it is today, and not anticipating, presumably, a much different path for Fed rate cuts starting in May.
Okay, and then let's talk a little bit about the tightrope that Powell will have to walk today, going back to the point about dissent. He'll obviously have to speak for the committee, but again, policymakers are clearly split, and it's not just about Myron, as you mentioned. What should investors be listening for, whether it's in tone or, just to tell us where the committee really stands?
So, Jay Powell's interesting. Is it Dr. Jekyll? Is it Mr. Hyde? Which Jay Powell's going to be at the podium? Oftentimes you see kind of midway through the press conference that he goes completely off script and stops speaking for the committee and starts speaking more for himself. And that's what I'm going to be looking for today.
Okay. All right. That is Daneille DiMartino Booth, CEO and Chief Strategist for QI Research. Again, when we look at the CME Fed Watch tool, the consensus is that we'll see a rate cut, the expectation 25 basis points later today.